What is up, guys? Good evening. Hopefully you're all doing good. So this is going to be the trade recap that we took on YM right over here to the bottom right corner. Yeah, this is YM right here. We're going to be breaking down the buys that we took on YM today. So let's get right to it. So coming into this week, we were anticipating a down movement lower back to either this specific relevant low or this relevant low here, right? On all of the indices, as you can see, basically the same thing on ES right here, YM. So looking at the charts right now, we can clearly see that YM actually tapped into this multiple times, this relevant low here, and we actually started to form a reversal signature going much higher back into the range, back to like this relevant high right here and this relevant high right here, right? You can see how all the assets tapped into this specific relevant high. We actually left this one here. I'm not even sure if there was an SMT. Let me look at the actual let me look at YM, the mini contract, because now I want to really see if it actually did take it out. No, it didn't. Okay. So we were coming into the session actually for looking for shorts for a continuation lower, just because we wanted to see a cracking correlate, well, an SMT within one of these relevant lows here. If we go on to the 4-hour, we had this nice V-shaped reversal here off this relevant low here. You can see how we didn't really have an SMT, like I mentioned. All assets took the low here, the relevant low, and then we started expanding much higher here. What I was anticipating was a specific type of a retracement back into the range here, since we were in a discount and we took out a relevant low. So you would expect something to you would expect price to retrace, especially because we opened up going lower already. So majority of the time New York would retrace, and then you would get that continuation later on throughout the session. But just the way these candles were closing, and we were also disrespecting bearish PD arrays, I did anticipate us to continue with the move higher, just based off structure, not really with any like confluences, because at the end of the day, guys, confluences are just extra extra confirmations to your bias. But realistically, all you need is structure, right? We had that relevant low taken on the daily, on the 4-hour, and I'm just gonna go on YM here so we can just look at it as a big screen. We had the relevant low taken out right here, so I'm gonna just remove this one for now. We had that V-shaped reversal plus the change in the state of delivery, right? So all these are indicating for a type of are like just indicating the reversal. We also were failing to respect this bearish inefficiency. So what would be our next target out of this? If it's failing the inefficiency, next target would be the relevant high right here. If I mark the daily open, which is right here, and then I mark the previous days as well, which is this was previous day's high right here. Okay. We took the trade at 10 a.m. because, like I said before, YM was the strongest for this session, and I wanted to see, and YM was the first one to take out previous day's high compared to the other two. ES was the second, and then NQ was the last. But I wanted to see what YM was going to do within this 6 a.m. candle. It was at the 9:30 hourly candle that we tapped into this previous day's high. So the two questions I asked myself once we tapped into this is, first, are we manipulating? Clearly, if we're tapping into it and we're fully reversing, so expansion with expansion, and clearly we would need those confirmation signals to determine to confirm that move lower. Or are we failing to manipulate, closing above the high and able to form like quote unquote support to continue going higher, right? So going on to the 30-minute here, before we had that tap into that, and I'm going to remove this relevant swing point. You know what? I'll just leave it right here. But once we were able to, before we actually tapped into the previous day's high here, we actually manipulated lower, forming an SMT right here within the three assets, and I'll show you that in a second. We also formed a PSP, right? So two confluences right there for our idea for a reversal. So realistically, this would be anticipating the C2 for a continuation higher. On the hourly, you can see it better. Clearly, we were able to take out this swing point and then closing back above the previous hourly candle, and we also were able to close back above previous day's high. So just this itself gave the reversal signature, including the SMT, and I'm going to show that to you guys right now. You can see how ES formed a failure swing, and same thing with NQ right here, right? This was the up close candles as well before 9:30, while the up close candles right here at 9 o'clock, while YM was a bearish close. So just this was already enough for me to actually, like, in a way, switch my bias, because first of all, well, this was the first step. The second step was me seeing what we wanted to see here, if we were going to either manipulate or fail to manipulate, and this was key, right? Because this could have just been a signature, yes, to take the buy, but realistically, this would have been your first draw, your previous day's high. After that, you want to reanalyze and see how price reacts at this specific PD array, right? Once you have that confirmation, then you can confirm the bias and then either follow the trend or trade the reversal. Okay, so going on to 9:30, that was the close of 9:30. This was the close on the hourly, and this was the close on the 4-hour right here. So each time frame showed bullish signatures, right? We had a great closure on all three time frames. So there is really nothing indicating for that reversal signature to continue back within the range or back to external low. So what do we do next is wait for that swing point to form. So we go on to the 3-minute here. This is our next draw right here, and this was 10 a.m. right here. So what does 10 a.m. do? We wick lower into this inefficiency, right? And then we start closing back within the range. So notice how we had this inversion here, right? We closed below it, tapping into this second inefficiency right here with the order block, and then we started disrespecting the bearish inversion, and then we started closing back above this one here. I'm going to remove this one. This was the one that I was looking at personally to see if we were able to close. These are the best type of V shape, is once you see an inefficiency form, which then you can see it close right back above it afterwards. So this is basically an A+ type of entry point, because you have the change in the state of delivery, you have the inversion that we're closing back above. So there are just two extra confluences right there that price is willing to hold, and then we were willing to go higher. My target was at this relevant high right here that we mentioned earlier. That was my target, because YM was a leading asset. So if YM is failing to manipulate this previous day's high, which both ES, let's see it, both ES were just not, they were, where was it here? Yeah, previous day's high was right here. So Actually, it was right here. So while YM was shifting and closing above its forming a change in the state of delivery, YM was doing, I mean, ES was doing the same thing and continuing back to the previous day's high. And we can also see the same thing with NQ here. NQ was lower in the range, but its previous day's high was right here. So you can see NQ was the weakest because it was the furthest away. ES was the middle and YM was the leading. So your eye should have been on YM to anticipate either that reversal or that manipulation, that a failure of the manipulation for us then to continue going higher. My stop loss was just basically just for it to be a fixed 2R, and then we were able to continue going higher. As you can clearly see, we were able to get that. If we go into the 5 minute, it's a little better. That nice change in the state of delivery as well on that 5 minute closure, and then we started forming these down close candles and disrespecting them, closing back above, and then until we were able to get to that specific draw that we were talking about. But that's basically it, guys. It was a very good trade for a Monday. We based it all off the on the daily time frame. As mentioned, we started off being bearish, but we wanted to see a relevant swing point being attacked, which was right here. And after that, we wanted to see a type of reaction out of that. Either if we're, like I said from up here, if we're either gonna manipulate or fail to manipulate and continue going lower. And realistically, YM would have been the ideal asset to be looking at. We also were able to take out previous day's high here. I mean previous day's low, sorry. And then you can see that V-shape reversal, right? So these are like structure says it all, guys. Sometimes the S&Ts and the PSPs are just extra confluences, but if structures telling you otherwise, that we're willing to go higher, then structure is just the most important, especially on the higher time frames. The higher you go, like I said, the 4 hour gave it all by this 2 a.m. closure back above the inefficiency, and then that 6 a.m. you could anticipate a C4, because this was the C2 considerably because we took out the relevant low, but that C2 closure, we didn't really get a proper C2 closure right here. So what you do next is wait for the next candle to actually close above its order block, which is this down close candle right here. But we actually had a better confluence, which we were able to close above the down close candle, but also including the inefficiency, the bearish inefficiency right here. So these were all the confluences that gave me the idea for us to continue going higher. Like I said, I did not trade the 6 a.m. candle, but if you wanted to, you were able to, especially because clearly if we're disrespecting the SIBIs, right, which on the higher time frame, it's an inefficiency, right? So if you wanted to short, this would have been your area of interest for it to see it validate the SIBI for us to go lower, right? So maybe on the smaller time frames, you would want to see maybe like an hourly C2, like during the 8 a.m. candle, or like a cracking correlation between the 30 minute and a 1 hour, or whatever the case may be. But clearly we didn't get that, and we were above the 4 hour SIBI. So even if you wanted to anticipate the longs, you could have definitely done it on the 6 a.m. because clearly if we're not respecting the inefficiency here, where is the next idea? Like where's the next draw where we can possibly reverse back at the relevant high, which is the previous day's high? So it's really not complex, guys. We were able to close above it, right, at 6 a.m. This was a 6 a.m. candle, the start of the new 4 hour. We opened it above, and notice how we never formed an, well, we did a very minor, very minor wick, but if you zoom out, it didn't even look like it was a wick there. But we opened up, consolidated within the 30. 8:30 didn't really do much. We went higher. We had a down close candle, and then you can see the manipulation happen. Clearly, this was the key because look at what happened throughout London towards New York open. We just expanded higher. So we didn't form any swing points throughout this whole session, throughout London session and pre-New York. So seeing this was necessary for us to get that bullish bias. Clearly, it would have been a little difficult to trade the 930. Yeah, like No one's going to be trading that, specifically if it's the draws really close. You would rather wait to see how price reacts to previous day's high, and then we can target other draws to the upside, which is the idea, which I think that was the best thing to do for me, and I think it would have been better for everyone to do, because clearly with this type of entry, with this large stop loss that you would need to cover, it's not worth it just trying to target the previous day's high. It's not even, imagine from I don't even know, like just the difference between them, it's not even a lot, right? So not even worth it, guys. It would have been better just to wait like we did and then get that better confirmation, because clearly this gave us all the information, and then we're just able to execute in peace with no drawdown basically, and just continue going higher back to that draw. So other than that, guys, that's it for this recap. Hopefully you guys learned something from this. I will be back live tomorrow as usual, same time, between 9 to 9:15, and then from there we can anticipate what price wants to do next. Most likely after this relevant swing point, we're looking like we're willing to go higher here, back to the like YM has straight clear liquidity up to here, so I think YM is the well, actually ES is actually much higher in its range. Wow, we're almost back to the all-time high here. So we're gonna wait and see, guys, how price reacts. At the end of the day, this is the draw right now, currently the relevant high, because we took out a relevant low. So from external to back to external, you know, ERL to ERL, that is the model right now currently that we're playing, unless we just manipulate at this previous day's high and then start showing signatures to go lower to attack these swing points right here, because clearly we don't really have an SMT to confirm it. So that's just the two options that we have, but most likely I like to see the relevant highs being taken. It just makes more sense, especially with this nice candle closure, C2 closure on the daily time frame. It just makes sense. But yeah, other than that, guys, hopefully you find this resourceful, and I will talk to you guys tomorrow. Have a good night and stay safe.